please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Flat on the benchmark indices spared some of the morning gains, but we've been rallying for the last 3 trading sessions, so today is just a session of pause. We've got the weekly bank expiry as well. The problem is in the mid-cap space, where the mid-cap index has been underperforming the benchmark indices. In fact, in this month itself, in the month of May, the underperformance of the mid-cap index has been to the tune of close to about 4%. But let's move on and talk about individual names. Sintex Plastics has reported a weak set of Q4 earnings. The revenue declined this quarter due to a dip in the custom molding segment. Margins saw a significant drop. We caught up with Samir Joshipura, the group CEO of the company, who said that the overall revenue should go up by 10% in FY19.
The revenue overall, if you want to see from 5,600 crores, it should go up by another 10% next year, which is, I'm saying, current year 18-19. And the EBITDA should be close to 14.5 to 15% moving forward, just taking away the one-time hits from what we had this year. From P&L point of view, prefab has always been a good business to have, and however, from cash flow or balance sheet point of view, it used to be a problem because working capital gets stretched in the projects. Most of the customers are government projects. Projects are little long drawn related to the government policies. Vis-a-vis our custom molding business, which is normally Fortune 500 business, very good customer relationship, very long sustainable business.
All right, then I think Shireen's standing by. She's going to give us the key takeaways from the CEO meet in terms of that big deal that we saw overnight. Shireen, over to you.
Well, absolutely, that $16 billion deal that has captured imaginations as well as the headline. Well, we had the opportunity to sit down with the Walmart Global CEO, Doug McMillon, as well as Binny Bansal and Kalyan Krishnamurthy of Flipkart. And once again, the leadership team trying to explain the rationale behind this particular transaction, the kind of valuation. Remember, the Walmart stock overnight was down by about 4% at close. But Doug McMillon making it clear that this is not a short-term opportunity. This is a long-term play as far as Walmart is concerned. In fact, explaining that the global board of Walmart has identified certain businesses in certain geographies that they intend to focus on to future-proof Walmart. India is one of the growth markets when it comes to Walmart. In fact, as far as the e-commerce opportunity is concerned, they admit and acknowledge the fact that it is currently small, but they do believe that it is compelling and see a significant upside, and hence the valuation and hence the bet on Flipkart. They, of course, spoke about the fact that they are excited about the opportunity of investing in rural India, of playing out in rural India. Remember, part of building out the rural infrastructure theme is the plan that Flipkart and Walmart have put together. When I pointedly asked Doug McMillon about political support for the deal, remember, Walmart hasn't had an easy past in India. They had to break their joint venture with Bharti on account of trouble. He did very categorically state that Walmart feels welcome here. They are excited about creating value. Remember, in June of last year, they did meet with Prime Minister Modi in Washington, D.C. and the Walmart CEO saying that the Prime Minister and other leaders want what is best for India, and Walmart is keen to support that. On the tax front, because that's the other big question mark, the Walmart CEO seemed to be fairly dismissive or, not particularly perturbed about that, saying that, look, we'll work with the regulatory agencies, but tax is not our single biggest concerns or one of our big concerns at this point in time. In terms of future opportunities, one of the big selling points, so to speak, is going to be how they work with the agri supply chain, how they work with the Indian farmer. This has been an opportunity that they've been working on for a while now, but will this finally translate itself into reality is a question mark. Of course, they hope to also being able to modernize the last mile, which is the Kirana store, and they do believe that across the world, consumers want a brick and mortar, which is the traditional retail and e-tail combination. So that is what they're hoping to play out here in India. When it comes to why Flipkart, they believe that this is, of course, the market leader here in India. They believe that this is a very innovative team. It's a team of creative entrepreneurs, and they want to dial into that creativity. Very hopeful about the fashion business, where through Myntra and Jabong. Flipkart is the clear market leader. And interestingly, they find PhonePe, which is the payment solution that Flipkart has, as an exciting opportunity. They believe that Walmart can in fact learn from PhonePe because they don't globally have a full-fledged payments platform. How is it going to work? The reason why Flipkart decided to go with Walmart is because the Walmart management seems to be okay with allowing Flipkart to operate nearly as is. Doug McMillon making it clear that they will follow a strategy where local leadership will be empowered, that bureaucracy from the US will not run Flipkart. That's heartening to note, at least as far as the Flipkart team is concerned. They don't see any need to change the brand. And of course, when it comes to things like the IPO, while both Flipkart and Walmart share the ambition of an IPO, they don't have a timeline just yet. So it will be a board-managed company. He spoke about creating an all-stars board, so people like Tencent and Tiger Global, etc., are also likely to get board representation, though the composition has not been finalized yet. When I asked him whether they could look at investing in other businesses, there are reports suggesting that, for instance, Walmart is in talks with Future. He was clear that while India is a growth opportunity and a growth market, Flipkart is the current focus, and they will continue to invest in Flipkart and support Binny Bansal and the team to perhaps even make acquisitions through Flipkart. So that's really the plan as far as the e-tail side is concerned. But what about Walmart's traditional business, the cash and carry business? Currently, they have about 21 stores here in India. They hope to up that to 50 stores in the next 5 years. So that business will run parallelly as well. Binny Bansal was also there. And of course, he spoke of how this is a watershed moment for India as well as India's startup space. He believes that this is a validation for investors who have bet on India, but also acknowledged the fact that a lot of work still needs to be done, acknowledging the contribution being made by his co-founder Sachin Bansal, who has decided now to move on. He will not be part of the Flipkart-Walmart venture. About the future opportunities, I think Binny was very clear that in the near term, in the short term, it is going to be about accelerating growth, accelerating expansion. In the future, in the long term, it is going to be about synergies both at the front end and the back end. But the focus in the interim, in the immediate term, is going to be on expanding and accelerating growth. They hope to learn from Walmart because the scale and size of Walmart is completely different. So that's what they hope to learn. And in terms of new areas, what we do expect to see a lot more of, for instance, that pilot project on the grocery side that Flipkart has in Bangalore. They hope to scale that up to 4 to 5 different cities. So that's going to be a big play. Food and groceries is likely to be a bigger play now with Walmart coming in. He also acknowledged the fact that while the e-commerce market had seen a slump, growth is back. And in fact, they believe that the market is growing at about 40 to 60% year on year. And Flipkart, they believe, has grown at about 100% over the past 2 years. So feeling confident, believe that there are synergies both in the near term as well as the long term. They believe that this partnership is something that Walmart is pursuing in other international markets and one that is likely to work here in India too.
Thank you, Shireen, for that. So amplifying India's digital retail boom. Let's move on and address the market technicals because the mid-cap space is selling off. The mid-cap index is down close to about 1.2% with names like Manappuram General Finance at the day's low. Ashwini Gujral and Rajat Bose join us on the show now. Ashwini, yet another day where the mid-caps are underperforming. The benchmark indices is not doing too much. Your thoughts and your trades?
See, my sense is market is losing momentum and soon the large caps will also join the mid caps. A, basically, the market is overextended, and B, heading into the event, nobody wants to take a 300-point Nifty risk. So my sense is as we go into the close, second half would be worse than first half. Right now, advances are hardly 450, decliners are 1150. So there are, 3 or 4 large caps which are holding this market. Once they give way, particularly given that today is a bank Nifty expiry, I think the banks could have a fairly torrid time in the second half. Having said that, JSPL is a sell with a stop of 247, target of 234. Muthoot Finance is a sell with a stop of 430, target of 410. And ONGC is a buy with a stop of 182, target of 194.
Okay, all right, Ashwini. So maybe we are in for a torrid time, second half of trade. That's Ashwini's call. Rajat, coming across to you. What picks do you have for us today?
I also have 2 sell calls. Both are in the future segment. Capital First is my first sell call. May sell its May futures with a stop above 604.50, 580 and 560 are the two targets. It's actually, the trade duration should be 2 days. I mean, 560 might be made tomorrow. And ACC May futures sell with a stop above 1495.50, 1459 and 1453 are the two downside targets. Both the stocks are trending down and they are attracting fresh sales in today's session, hence these two calls.
Okay, gentlemen, thank you very much for that. Let's get in the early rates from the European market. So that should be up for you on your screen. I think the CAC and the DAX have opened up very flat, so no real direction emerging, at least from the benchmark European indices.
For Fortis, the board will decide and evaluate various bids, taking into consideration recommendations of the expert advisory committee. Ekta is with us in the studio. Ekta, tell us, what do we expect? I think you've got a late evening.
And I hope not a late night, because that's generally been the case for Fortis and their board meets. But nonetheless, what we are expecting today is that the board is going to consider the expert advisory committee bids today. Now, remember that the expert advisory committee consists of Deepak Kapoor as well as Lalit Bhasin, and this is the same committee that Renuka Ramnath had stepped down from. Now, remember that there will be 4 binding bids that they have to consider. I'll come to that in just a bit. It's important to note that Stancy is a financial advisor here. We have Cyril Amarchand Mangaldas, that is the legal advisor. Plus, we have Arpwood Capital, which is the second financial advisor to this entire, to the board as well as to the EAC, in order to assess the best bid from these current 4 binding bids. Now, remember that for these 4 current binding bids, we have Manipal TPG, Munjal Berman, IHH and Radiant KKR. Now, Manipal TPG and Munjal Berman are completely binding in nature. So they are saying that we don't require any due diligence to invest into the company. Manipal TPG changed their structure recently. It's 2,100 crores in terms of a preferential allotment, which would be an immediate infusion, and then a merger of the assets with Fortis at 160 rupees per share. For the diagnostic business, they're going to look to buy out 31% from the private equities. That would be at a valuation of around 1,100 crores. For Munjal Berman, they too are saying that we don't need any sort of due diligence to enter into this transaction. They're saying a total investment of 1,800 crores, out of which 1,050 crores would be an immediate infusion, which would be a combination of preferential equity as well as in terms of warrants. And the remaining part, which would be 750 odd crores, would be via warrants. And again, like I mentioned, no due diligence, and diagnostic business would then be probably independently sold off to the best valuer. IHH Radiant, they do have some amount which is binding in nature, and the remaining is non-binding in nature.
Okay, let's see if a decision also comes out today, or they buy more time. The benchmark indices, Bajaj Finance and Bajaj Finserv are losing ground. In the last 1 hour, they've lost close to about 1 percentage point. But let's shift our focus on the earnings to watch big ones today, Asian Paints, Titan as well as Z. So let's kickstart the earnings preview with Asian Paints. Mangala, the key expectations?
Key expectations for Asian Paints, Rima, a few of them. First up, the top line, we're expecting a growth of about 11.5% on a consolidated basis. That is something we'll watch out for. Secondly, the street is expecting a margin expansion, an EBITDA margin expansion of close to 19 basis points. We're working with a number of 18.9%. This despite the rise in crude and the weakness in the rupee. That is primarily because the company has taken a few price hikes. So this is with a caveat that there is downside risk to the margins. But if the margins do come in line with street expectations, we're working with a net profit growth of 12.5%. Qualitatively, the management commentary on volume growth will be most important. They do not give the exact number. Mid-single to high single digits is something that we're working with. 7 to 8% is something that the street will like the most. So that's as far as Asian Paints is concerned. As far as Titan is concerned, solid quarter expected for Titan, because the management has been speaking to investors during the quarter, and to the exchanges they've given the quarterly update as well. Jewelry segment, which accounts for 80% of their revenue, is likely to see growth in the mid-teen region. So as a result of that, we're expecting a 15.5% growth on the top line. Closer to that 4,000 crore mark is the number that you should be watching out for. EBITDA margins in double digits, 10.2%. So EBITDA of 400 crores is something that the street is watching out for. As a result of the growth in the top line and EBITDA, we'll watch out for a profit growth of close to 40%. Titan trades at 40 times 2-year forward earnings. So it'll be interesting to see how the street treats these numbers, because the stock has been on a fast track.
Okay, all right, Mangalam. From Mangalam, let's go across to Sonal. She's joining in to run us through the expectations of Zee Entertainment. Sonal?
Thanks a lot for that, Nigel. Where we are expecting decent set of earnings. Remember last year, same quarter, they had sold off their sports business and also had made 2 acquisitions. So on reported basis, revenue growth of 11%, flat EBITDA, operating profit margins are expected to contract because this quarter they have launched their OTT app. On reported basis, profits are expected to go down by 83% because they had a component of other income last year. But on adjusted basis, profits are expected to go down by 14%. The 2 major numbers, ad revenue growth on adjusted basis is expected to be at around 20 to 21%. Domestic subscription growth is expected to be at around 16 to 17%. But on reported basis, we are expecting ad revenue to grow by 22 to 23%. But some pressure on the domestic revenue, subscription revenue growth, and that is why it is expected to decline by around 3 to 4%. Well, management had told us last time that they expect to maintain the margin levels at around that 30% mark. Let's see what do they talk about it and how the guidance really goes about it when the results are out.
Okay. As flat as can be, but the big story really has been the crude price movement in the last couple of trading sessions. So Manisha is with us. Manisha, what's going on in the commodity market?
Well, further gains as far as the crude prices are concerned, and you also are hearing of further gains from here on as well. So after 3% gains overnight, we are trading a percentage point almost on the higher side in the European session right now. It has been a good 5% of gains in last 2 trading sessions itself. This is after US walked out of the Iran nuclear accord, and that really seems to be opening a complete Pandora's box on what the consequences from here can be, who all is going to be a part of this and not. And of course, from here on, who would come on to fill this gap? Is it going to be the OPEC members, Russia or US, etc.? And of course, it is about a very strong list of fundamentals which has been supportive for the crude oil prices. But what is not doing so well clearly has been the metal space. Starting right from the precious metals to the industrial metals, almost everything is trading in the negative. It really has to do with the strength in US dollar, which is trading at a 4-month highs. You also have seen, while the construction demand has picked up, it really has been about the supply concerns which seem to have eased off, especially in case of copper in Chile. Apart from that, aluminum, while of course it has been rising on a premium, but a latest statement from Japan says that while they have suspended buying or procuring any aluminum from Rusal, they are now procuring it from other exporting and producing countries. So it's not that there is no aluminum into the market. So markets already are looking at newer markets, leaving Rusal out, and that of course has led to some more profit taking in that space. Ditto is the case with other metals. So whether it's steel or iron ore, all of that has been trading in the negative in Shanghai and now on LME as well. Aurobindo Gai now joins us with more strategies. Aurobindo, hi, welcome. How are you looking at the metal space to begin with? The kind of profit taking or declines that we have seen, are you buying into these or do you see further fall?
Well, I think base metals per se, if I would say, of course, they are now kindly confused or a bit of sideways movement. So I think we are seeing some of the metals are rising, some of the metals are falling. Like we talked about aluminum right now, I think that is one of the reasons, one of the commodities which is rising. But then if I talk about other metals like copper, nickel or zinc, they are slowly declining from the higher levels. So I think for today, tomorrow, I think I would go short in copper, and the call is to go short around the current price of 459, 460 at the Indian market, and we should see a drop around 6 to 7 rupees or maybe close to 10 rupees in the next couple of trading sessions with stop loss of 465. So I think among the base metals, we need to be a little mixed kind of view for the next couple of trading sessions.
Sure. And how are you looking at the crude oil prices? Further gains from here, all those $80, $82 calls that we get to hear nowadays, how far is it and is this a good buying level?
Yeah, I think I would first talk about the WTI. It is another $2 upside potential is still there based on the technical chart patterns. And of course, the recent development that we talked about, the nuclear deal. So I think that is going to be a catalyst or maybe trigger for it to rise. So I think we are looking at WTI moving to close to $73.50. So if that we translate to Indian market, I'm sure it will be close to 5,000 rupees per barrel here in India. So we need to be cautious because the trend is positive and it has, of course, a lot of cascading effect on other activities of the economic side. But then oil is looking positive now for the short to medium term.